Live. Welcome back to Stock Tricks with Nick for the midweek movers episode of the week. So, if you guys are new here, we do a live stream on Wednesday night covering just some of the stocks that I've traded either Monday or Tuesday, what's on my watch list, and anything that I get from either Twitter or Stock Twits or in the comment section of this live stream. So, got a couple of stocks up here that I plan on covering. Got Tesla's earnings, JKS finally pulling down, and a lot of the market being shaky this time. So we'll cover a couple of winners of mine, a couple of losers, and what's on my watch list for the end of the week. For new viewers, the point of this live stream, or both of the live streams, is to be fully transparent about every part of my trading. I don't always win. Nobody always wins. So I like to share what I did wrong in a post-trade analysis. We'll get to that with LAC and PENN. And just be completely upfront and honest. So with that being said, leave any stocks that you want me to check out today in the comment section of this video. We'll be going through that when we get done with this list, or as a little break. So, how's your guys' week going? Hopefully, it's profitable. It's been a very choppy week in the market. A lot of good constructive setups are breaking to the wrong side. So, for me, it's definitely not the time to swing for home runs. Just trying to get some singles, doubles off, try to book profits while they're there. Not be too fancy with this week, especially leading into the elections. A lot of chop in the market. So let's get started with Tesla, TSLA. So they just had their earnings this once the market closed. It's been a really nice pattern that I tried to trade. You can see I got in at 428 here as it coiled up very, very nicely. And then started breaking out. So got in 428, started taking some profit up here, and then as it was pulling down, I realized that it wasn't going to hit my my earnings. Well, let me put that in the window. So with earnings, you never know what is going to happen during earnings. So I have a personal rule: if I'm not up 10% on the position or more, I'll take the trade off. If I'm up 10%, I'll still probably take a little bit of position size off, just because I want to book some profits, and earnings is always unpredictable. So as it started working against me, I realized that I wasn't going to have that 10% that I personally need to hold into earnings, so just cut the trade as it started making some new lows here. Looks like we're up 3.25% after hours. I was just kind of skimming through, and it looks like they were profitable for the 5th consecutive quarter. Things look fine. The 3.2% being up is probably because the market is still so shaky. Otherwise, we'd get a larger gap up. So this is a stock that I'm interested in trading going into tomorrow, because this coiling pattern is still basically what I look for in a stock to break out, especially one, if we zoom out here, you can see monster move through this range up many hundreds %. So if we can start moving higher, move over today's high, which if it opens like that, we should see that. And then getting over today's high would also get over this. Let me change the ticker on the bottom so you can see what each of these lines mean. So if we open up higher tomorrow, we got the 20-day simple moving average, this green line. We got the 8-day exponential moving average. Get over that, and then we have all the trend lines going the right way, going up. So something that I'll look for trading. Probably wait for the first hour or so of the market just to see if we get a morning pop and then a pullback, since this isn't an explosive earnings report. But that's Tesla, looking good. Glad I took some profit on the way up. And it looks like fine that I sold a little bit on the way down. But looking good into tomorrow. So that's TSLA. This isn't one that I traded, but definitely has been on my watch list, and have applauded the people who have been able to hold through this super consistent uptrend. This is JKS, and let me kind of pull this away. So before it started breaking out, nothing too crazy here, but then you get this first candle with a ton of volume breaking over all the previous highs. So if you bought in on that first day, you were just riding up the smoothest uptrend that you've ever seen. I think I went through this yesterday. I don't think it ever broke below the previous day's low, which a lot of trend followers use either the previous day's low or 2 days before that low as their stop loss to get out. But one thing to point out here is yesterday's candle was a clear sign of a possible blow off top, because what do I mean by a blow off top is when a stock's extended, overextended, really going. So this jumped, let's see, I guess before yesterday, 220% in a month, and it wasn't one single pop and then kind of sideways action. This was just continuing to overextend. When you're this late into a breakout and you get a large spike of volume, so let me just kind of pull this back to yesterday. When you get that large spike of the volume, what is this? Is it double the previous days of high volume itself? That's usually a day to take some profit. Do you take it all at that point? I mean, if you've held through this, you probably still want to hold a little bit. But yesterday was a great day to take some profit. And then today, got a little break over those highs, and then just immediately started selling off. I think there was a little rebound up to like -4, -5% during the day. Let's go to the daily. You got this like little rebound, but then just strong selling. So, want to give props to anyone who is in this and held through this strong uptrend. That's something that I'm trying to work on, is sit on my hands. Don't sell too early on a winning stock. So this was absolutely a winning stock. So anyone who got in and was able to profit, congratulations. Great trade. But just something to kind of keep in mind when you're in a stock that's really breaking out and overextending. You want to take some, at least a portion of your profit when you see that big spike in volume already on a kind of extended stock on a day that really breaks out and gets over the Bollinger Band up here. So just another kind of tip to put in your toolbox, because this great trade and would have been even better if you locked in some profits up here. But hopefully you had your stop loss maybe under the previous day's low, or you could kind of sense that this was getting overcooked and needed to pull down. So I'll keep this on my watch list, see if it pulls down maybe to the 20-day simple moving average, sets up constructively to break out again. But interesting chart, to say the least. Let's go AMTX. Oh wait, no, I'm saving that. Let's go JD, JD.com. This is one that I'm currently in. We got a strong breakout that I missed, that I've talked about in previous streams, and then kind of was just waiting, being patient for a chart to set up, and we kind of got a inverse head and shoulder. So you got the left shoulder, the head, right shoulder, and I bought on this day at 78.63, kind of when we broke over the high of the 10.6 candle. Since then, pulled back really quick to that 8-day exponential moving average that held fine, and then we moved up. Like I typically do, took 10% profit, 10% of the position off when it went over a multiple of my average gain, 7% on a winning trade. Since then, it's pulled back, kind of stuck to that 8-day, and we got higher highs, higher lows. even though it was kind of a flat day. And then looking down here, you can see price relativity continuing to be strong on this one. So why am I bringing up this trade? Because now when you zoom out, you can see that cup and that handle. So it's not too late for anyone watching now to get into the trade. What am I looking for is a break over the candles, the cup's top here, and that would be at 85.39. So I'm already in this one. So far it's been a winner, showing good relative strength, building up even while the market's shaky, pulling down. So one to watch when the market turns around. This one should float even higher. I'll be doing ROKU a little bit later into the stream once I get to the watch list items. Another one that I wanted to cover was NIO. This is one that I've covered in previous streams as well. Bought in while this was flagging out after a strong breakout. So NIO has been a beautiful, beautiful chart to study because every time it breaks out, it does so on heavy volume. And then every time it pulls back or moves sideways, you see the volume lightening up. And it's just a stair step each time. So when you see something like that, you see a stock that is breaking out, is already in a strong uptrend. You're not buying at these levels, but you want to start adding stocks that are breaking out, are strong to your watch list. So once they pull down, once they create a very tight entry, then you can put a trade on when it starts showing strength and breaking out to new highs. So zooming in, I bought in on this green candle as it broke this kind of downward diagonal that I drew there just by a cent or something. The next day started moving up but pulled back down. The next 4 days or so never gave me a reason to sell, but didn't look super great. But the volume on it was getting lighter and lighter, and that's what you want to see. After a strong move higher, once the short-term traders are all done taking their profit, you'll see volume get really light, and then that illiquidity in the stock at the lightest volume point, once you get big buyers coming in, that illiquidity is going to cause a rapid price expansion. So we got upgrade by JP Morgan, I think. Here's JP Morgan. Huge volume coming through. Great follow through the next day. First red candle close outside of the Bollinger Band. That typically leads to the start of a pullback, so took some profits through there too. And then these last 3 days, I haven't done anything because this is showing great relative strength for a stock that's moved up 30% from its breakout point. Today, I think we got maybe higher highs. Let's see. Yeah, slightly higher highs, slightly higher lows. Volume getting light again. So this starting to look like a bull flag after a breakout, similar to the prior ones. Do we move up another leg? I'm not sure. I'm still in this with about a third of my position from down here, but I'll be adding to this if we kind of break out to the upside. Won't put my entire position back on because the market, like I said, is being shaky. So don't want to try to swing for too many home runs. But constructive pattern, great one to study for future breakouts. The more you go through charts that have broken out, the easier it is to identify that coiling pattern, volume lightening up after a pullback or during a pullback, and then that spring forward with high volume. So that's the recipe for breakouts. It doesn't have to be complicated to work. But that is NIO. Let's check that guy off. And we got another one from StockTwits was PTON, PTON. This is one that we've covered in the past. Really strong trend forward. And then we start running into some action here. We see volume picking up. And your highest volume day recently, let's see, in the past 2-3 weeks, or actually during this whole extension, has been on a red day. So that's the first day you're like, okay, probably need to take some profit off the table, but not freak out, not trash the entire trade because of one red day. Next day, got a test of that 8-day, pulled back up, another sideways movement the next day, and then today you get the dump of 5%, breaking under that 8-day exponential moving average and the previous lows of a lot of the past week or so. So at this point, you probably had your stop loss under some of those previous lows. It looks like we're down another 3.25% after hours. I think someone downgraded Peloton. So at this point, you're taking profits, and still keep it on your watch list because we pull back. We got 20-day. This sets up constructively. I mean, look at what Peloton's done this year. It's up. Now it's up 350%. It used to be up 390. This is a super strong uptrend. Looks like it's going to start to give back some profits now, so make sure you lock in what's yours and keep it on your watch list. Last stream, I talked about riding the uptrend. Once you start getting into some high volume pullbacks, that's when you want to start locking in your profit. Peloton, got another one from StockTwist to check out. That's UPS. So this one, similar strong uptrend. At this point, let me bring this down a little bit. So you get a little bit uptick in selling volume here, but basically still riding along that that same line. So let's just draw this in. So that's not exact, but first close under the 8-day exponential moving average. We got earnings coming up. Let's see, when is that? 10/28. So again, I never like to trade into earnings, so not a trade that I'll be taking this close to earnings. But what am I watching for is a break under this red candle's low. So that candle is 171.11. Below that, you start to, I guess you have basically tomorrow or so, that 20-day simple moving average, this green line here, will match that low. So don't put your stop right at that point, because a lot of the times algorithms will come down, hit previous lows, but put it a little bit lower than that, because once you get lower, you're looking at the 50-day simple moving average to test, and you don't want it to fall that much. On the upside, I mean, if you can, this swings around and goes on a little pre-earning run, that's great. Maybe you can hold some through earnings, but again, unless I have a 10% profit, I don't hold through earnings. All right, let's go to ATVI, Activision Blizzard. So zooming out to get the full picture, kind of trading just sideways lately, nothing super exciting, maybe a little cup and handle recent. Is that true? You guys, did my stream just cut? Can you let me know in the comments? Shoot. Are we good, guys? We are? Okay, sorry about that. I got a notification that it got cut, so we're still in. Let's jump back to it. ATVI, sorry again. So a little cup and handle there, made higher highs, higher lows. Now we're above the 50-day simple moving average, the 20-day and the 8-day, all right there. So it's a solid trade to take, because you have such a short amount of time to know that you're wrong. So when it pulls back under these lows, you can say, oh, I'm wrong for taking this trade, and that's just 3%. So a low risk entry if you go with the break over today's high. But because it's been moving sideways for such a long time, maybe not a trade that I would take. If you're already in it, though, that's what I'm watching for. That's ATVI. And then NVAX, got a request on this one as well. This is one that I tried to take. It was setting up with that volatility contraction pattern, VCP, that we talk about on so many streams for good breakouts. Unfortunately, we did not get that. We got the opposite here. Let me take off my buy and sell flags just so it's a cleaner chart. So you can see pulled back 24% from the high, pulled back here 13% from the high, then pulled back here 5%. So 3 pullbacks of less and less magnitude typically will lead to a breakout for a stock that's already been in an uptrend. Well, I guess I should count this big one too, and that might have been what did me in here. So that was a 57% pullback. Maybe I don't trade stocks that pull back that heavy going forward, but still looked like the volume pattern that I wanted to trade. You could see volume lightening up as it gets tighter and tighter, and then we got that breakout over all these previous highs with heavy volume. So at this point, I'm feeling great about the trade, but runs into that 50-day simple moving average, this red line, which is exactly where the rally stopped last time. So I knew we were kind of in danger, gave it the next day to see if we broke over that and could hold prices over that. We couldn't, but it was a low volume pullback, so still in the trade. And then the next day, as it broke under the previous lows, I got stopped out for a loss. So losses happen, but let me throw that back on there. Trade history was I think I got a 107. Yeah, 107. At that point, I knew I was wrong. So I'd rather admit I'm wrong quick and get out of the trade. And then you see the next 4 days really just breaking under all those moving averages. And now you get kind of the opposite pattern of what you want to see on a breakout to the upside, is where you're closing near the low of the day each day. You're closing right at or below the lower Bollinger Band, and selling volume is increasing. We'll see how this volume chart comes in for after hours today, but not a chart that I would like to be in at this point. Might be some support. Once you move a little bit lower, there's this gap on the chart. So a gap between the high of this day and the low of this day on 7.6 and 7.7. The high is 81.19. So not much support in this area until there. I mean, you got this low at 83.22. So maybe that serves as a little balance point. But if we get that close, I'm sure we'll probably fill the gap. And then maybe some support in here. But not a stock that I would want to be in. Again, always trying to put my money in stocks showing good relative strength right now that are working hard in my favor. Once stocks start working against me, I try to cut them as quickly as possible. So that's NVAX. Got this one. I haven't checked this out before. ADXS. Yeah, so not a stock that I would trade. Only 51 cents. Not sure how much technical analysis is going to help here, but someone asked to see it, so we'll just go over it really quick. You see big volume coming in here, but actually, I'm going to retract that. Not going to talk about this. I usually try to trade stocks above $5. There's a couple that I've traded, PEIX and ADXS. Oh no, that's this one. AMTX, sorry, that we'll get to in a little bit. That has worked really well, but for the most part, try to trade stocks over $5. That's typically what swing traders will focus on, so a lot more of the technical analysis that we talk about will work better for those kinds of trades. So that's everything I got from StockTwits. I see a couple other on a live stream, but let's just go over a few trades that I took, starting with my losers this week. LAC. So this broke out on huge volume through here. Let's see, just kind of from here. Went up 95% in just a few days. So thinking this might be a power play here. I took this trade twice actually, and both times got stopped out. So looked at the flag going through here. So bought just a couple shares, maybe a third of my original type position. When I forget what price, let's see, at $14.20, but nothing big, and then got stopped out shortly after that. I think I sold into the strength a little bit here. And then, let's see, tried this the next day as I kind of redrew this. You see, now it ran right into that 20-day simple moving average. Selling volume's been light this entire time. So if it wasn't for hitting my stop loss, I'd still be in the trade. But this jumped up the next day, found support at that 20-day simple moving average, jumped up and pulled back down. I bought right at the close as this pulled. I got in at more of a reasonable price. Next day we had an inside day, so nothing really moving between that 20-day simple moving average and that 8-day exponential moving average. And then today got stopped out as we opened lower than some of those, the 20-day that was holding support, and then just flushed. So got out of the trade for a loss, and I mean, we'll keep this on the watch list, but after 2 losses, even if I do take the trade again, it'll be with much less size because I don't want to keep doing damage on the same stock. So that's LAC, twice a loser for me. Next, we got PENN, PENN. We talked about this last Friday. Traded this successfully in the first break, or not the first breakout, but this nice breakout through here. We got the coiling action. Broke out on heavy volume, pulled back, volume getting much, much lighter here. Had a little low sweep to knock out some stops, and that set it up for a really nice, easy breakout. So looking at the chart through here, that's what I noticed. Got this gap down to kind of take out all the stops through here. Got another move lower, but just slightly higher than this day. So felt pretty good about that. Like you like to see low pullbacks, giving a really nice entry point. So I got in half my position on this green candle that closed right at that 20-day simple moving average. Put the rest of the size on as we see volume pick up, and we set higher highs, higher lows, breaking and closing over the 20-day simple moving average and breaking over $70. So a round number there. And then this just immediately worked against me. We see high volume sell-off, break through both the 20-day and 8-day exponential moving average, hit my stop, so got stopped out. Next day, saw a little rally, get stopped right at that 8-day exponential moving average, so there's resistance there. Today's rally got stopped out right at that 8-day exponential moving average, and we closed right at the 50-day simple moving average. So at this point, I'm not in the stock. I'm still watching it. Maybe we find some support at the 50-day, do one more kind of coil before breaking out again. But once the stock starts moving against me, I want to get out of the trade, keep my capital either on the sidelines or put it into a stock that's seeming ready to break out. But this break to the downside was one of my first signals that the stocks that I like to trade, more of the growth stocks that have shown strength, that was the first one that this was a really clean setup that broke to the downside. So I'm taking note of that, being like, okay, first warning sign. So just jumping back to NVAX, I see in the comments we got a question. Is it going down to 83? I have no idea. Anyone that says for sure where a stock is going is just lying to you. Probability-wise, I do think we'll kind of close this gap before anything else. We saw some support and then lose support after a really clean setup that broke the other way after hitting that resistance. So not a stock that I want to be in. If you're a swing trader, you don't want your money in a losing position. You want it always either on the sidelines where it's safe or in a winning stock. Okay, so those were my 2 losers, LAC and PENN. Let's go to some winners, just so people new on the stream don't think I'm always a loser, but want to share those to be completely transparent. So big winner, AMTX. I mentioned this on StockTwits all the time, so if you are not following me on StockTwits yet, make sure you give me a follow there, and on Twitter. Post a lot of these charts before they break out to kind of signal to you guys what I'm watching. So this was exactly the type of setup I like. Stock that broke out, kind of consolidated, broke out again, get continuation. I'm not in it at all in this point. Still a little cheap at $2 for me, but it has run. Let's see. At this point, it ran 400% in a couple months, so I'm interested. This isn't just like a pump and dump. It's gone through a couple consolidations and breakouts. So at this point, drew a little downward diagonal there, picked up some shares. Let's see, 345, 338, added this next day where we opened, tested the 8-day exponential moving average, and then closed higher. So got in with 10% of my position. Oops, sorry about that. Got in with 10% of my portfolio at 355 average. And let me kind of zoom in here and get the big volume here off so you can see relative volume. We see breakouts on heavy volume, which is exactly what you like to see, and then pullbacks on very light volume days. So lots of buyers, very little sellers. That's what we saw here. 3 days of selling, super light compared to the volume here. Really just came to a trickle at this point. Only 500,000 shares traded the day before the breakout. So you want volume as small as possible on a stock that's already been breaking out in your favor right before the next one. And that's what we saw. Huge buying volume tick up as we get higher highs, higher lows. Took 10% of the profit at 2 of my multiples there. Next day, took some profit again. Then we get this red candle close, which typically leads to a pullback. The fact that we didn't get a pullback today is a signal of strength, but did take 10% off there. Took 10% right when it hit 5 today. So at this point, I'm only half in my position left, but we're up 41% on the trade. So the fact that I've taken 50% of the trade for profit, now I can let it wiggle a little bit, but this looks super strong. Even on this red kind of sideways day, look at the volume. Much lighter. On today's breakout, much heavier. So is this like the JKS stock that we talked about? Not exactly, because we haven't had those multiple days of breakout, just overextending. We've had just 4 days since the constructive pullback here. So if we get another 4 days of just constant green bars going up, then yeah, it's getting overextended. If we see volume spike up on a really, really long candle, then I'll take the rest of my profits there. But for now, I've booked great profits on this trade. This is a similar setup to the PEIX stock that we've talked about in recent streams. So we're just kind of going to let this run, see how this wiggles out the rest of the week. But this is AMTX. Was calling it probably through these 2 days on StockTwits. Signaled when I bought, and hope you guys got in with me because this was a super clean setup on a really strong breakout. Another winner this week was PBI. So zooming out to get the picture, you see this 7-8 day breakout of 133% on strong volume again. And we get a pullback to the low of 33% from the highs. And this wasn't on my watch list at this point. It was actually someone on StockTwits that was like, hey, Nick, check this stock out. So if you're on the stream, thank you for that. Made money off this pick. But you can see it wiggled, broke out, and then let's zoom in so you can see the kind of the relative volume here. So broke out on high volume, and then as it pulled back through here, quiet. So that's a sign that the short-term traders are basically done. And then you get a break with higher highs, higher lows, and see that volume spike. Well, you always like to see volume tick up when you start to break away from a coiled pattern, because the more volume in that breakout, the more likely it is that it's not going to retest the breakout point. So I got in a position at the end of the day at 650 was my average input there. Yeah, 650. Didn't get a full 10% size on it. Got like maybe 8%. But next day we see volume spike even higher, And let's see, what was that? So from 650 to the close, that was a 15% move. So that was great. I did take some profit through there at a couple multiples, or actually just one multiple. I thought I took another little size off, but maybe because I was a little bit lighter than my 10% typical, just staying in the trade. Today showed great relative strength. A lot of times you'll see these breakouts and then pull back on lower volume, but today, sideways movement, closed a green hammer, so the open, and then it closed right at the high of the day. Good volume too, so looking for this to continue on. Now, are you buying at these prices? Absolutely not. There's going to be setups. There's setups every day in the stock market. You don't want to buy a stock that's already overextended. If you're adding this to your watch list, you're waiting for this to kind of do a low volume pullback, maybe to that 8-day exponential moving average, and then kind of set up like NEO in a bull flag, something like that, to take the trade. But yeah, this is what you're looking for. See, let me kind of draw horizontal-ish. Not perfect, but you get the picture. I'm drawing it from the high here on 825, and you see kind of a test up there, little pullback on lower volume, so broke right to that point on high volume, then pulled back, got quiet, and then the day we broke over that point, did so on heavy volume. Perfect sign for continued breakout. So great chart to study. This is PBI. All right, let me jump to the comments, get a couple stocks here, and then we'll go through my watch list for the rest of the week. So KN. Have not heard of this stock before. Let's see, what does this do? This red line here is the 50-day moving average for volume. Kind of gives me a signal. All right, zoom out here. So constructive chart and a strong uptrend through here. It's over $5, so not too cheap. Let's see, what did this jump up? 116%. I like it. Pulled down from the highs. 27%, not even 30. That's really solid. 2 selling days here. Pretty heavy on volume, but getting much lighter. All right, I'm adding this stock to my watch list. So we'll see how this goes. What I'm looking for is a break over these previous highs. So this is 561, 563, 565. So kind of zooming in here, you have the 8-day exponential moving average and the 50-day, both right at the low of the day today. This volume's very light, heavy volume as it kind of pushed up through here to reclaim some of those moving averages, then move sideways. It's getting quiet. Interesting stock. Thanks for recommending this. I'll keep this on my watch list. If you're already in the stock, you got Tuesday's low, what is that, 535, and then the 20-day simple moving average, 530-ish, to be watching for your support areas. So, nice. This is KNTNF, something to watch. Plug. Yeah, Plug was on my watch list too. This is another example of a stock that, when this broke to the opposite side, another kind of strike against the market, because this was a stock that broke out 63% from this low point, even from this kind of coiled spot, 40%, and then started wedging here. Not perfectly drawn, but you get the point. Started wedging, which typically for a stock, when the market's healthy and things are breaking out to the upside here, usually does break to the upside. The fact that it broke this wedge to the downside and cleanly cut through the 20-day simple moving average, closed at the low of the day on heavy volume, now is circling that gap in the chart. So let's see what this high of the day from 10-2 is. So highs 1429. That likely gets closed before this starts moving higher. But again, this was a beautiful setup. I had this on my watch list, had this on my buy list, that it didn't show the strength really needed to buy. But really unfortunate that it broke to the downside. Then hopefully you were using either the low here if you were trying to get in on this wedge, or had some 5%, 6% stop to get out of the trade. But this is strike 2 against the market. Even though some of the indexes were up, those are driven by the main stocks. So maybe sometimes I trade Apple, Facebook, Google, whatever, but a lot of the growth stocks that I'm trying to trade, they're painting a different picture in the market. So this is showing market weakness. So I'm pretty light. I have a QQQ short hedge on, basically not trying to make money this week, which is probably weird to say, but I have a couple of stocks that I'm in that's showing good relative strength that I want to stick in and have the QQQ short as my hedge, but not trying to do too much this week. Let's see what else we got. Let's go to ROKU, because this is a stock that I just bought today. We'll see how this goes, but you can see little bull flag there. Broke out really nicely, 47%. Pull back to that 8-day exponential moving average. Did so on light volume. And then we got a clean break. I didn't buy at the high. I bought when it broke over the previous day's high. So let's see, 224. So down a little bit on this position right now, but still one that it's not like too late to take. But what I would say is only take it if it's showing strength. If the market's showing weakness and this is breaking below lows, we got this gap to fill. Got the 20-day simple moving average here. It might kind of retrace too. So I have my stops, or I'll have my stops at kind of that 20-day. I have to work out the percentages, but a stock that I would look to add to if we show another day of strength, kind of breaking over today's high of 227. But the fact that it held up reasonably well, up 2%, while the market was shaky today, that's a good thing, showing good relative strength. The whole time through here, you see relative strength's increasing. So just trying to get in a position on this, what looked like today of a break over that bull flag using the previous highs of days there. So that's ROKU. We'll see how that plays out. See Walmart in the chat. So Walmart, really constructive chart here. We got this breakout that pulled back, and then you can see kind of this little cup and handle. We talked about this on one of the streams before, but you clear, if you just use the high of the days of some of these days, you got the low cheap buy on 10/9, October 9th. Got a little movement higher, just 3.5%. The thing with Walmart is it's not fast moving, so it could be a clean chart. You can make money off it, but it's not going to be a high stress, high reward position. Since that, volume's kind of just steady as it's moving sideways, holding up right around that 8-day exponential moving average, but like a lot of the stocks today, closed right near the low, just like it did the previous day. So we'll see if this low and this low holds at around 142.70. If those can hold, then stock's still making higher lows. But if that breaks through, then we got 20-day at 141 and 50-day at 138. And it's just better to have your money out of the market than in a stock that's pulling down. Let's get to another one that I am watching for a breakout. This is Adobe, ADBE. So zooming out here, you can see strong uptrend. I did trade this kind of in this handle area. I think I got in. Let's see, what price was that? $4.77. So got in right near the high of the day on this day, where broke over the top of this and moved sideways, and then just took off. Sold some through here, then got stopped out as it pulled back down. Now it's setting up constructively for another move higher. We got this giant cup through here, got the handle pullback. Now let me zoom in here. Using the highs of days as a diagonal resistance point. So if we break over today's high, then we kind of snap out of this pattern and it could start moving up higher. And the reason I like this is it's not going to be a stock that's going to run 100% or anything like that, but you have the 20-day and the 50-day right below the current price. So it's a stock that's going to tell you immediately if you're wrong. Those are the stocks I like. Anything that says, Nick, you're wrong right away, that's going to just improve your risk reward on a trade. And like I always say, there's no absolutes in trading. You're just trying to stack the deck with as much probability in your favor as possible and then roll those dice. So this is one good risk reward trade. I'll be looking for this tomorrow and showing decent relative strength as of late. Nothing crazy though. So that's ADBE, Adobe. TTD, the trade desk, you can see was super strong. Breakout 50% through here, all strong volume. And then you get a large volume sell-off. So that's a little concerning. Maybe this is just a bear flag. So instead of a bull flag, you get a breakdown and then kind of a guide up on lower volume. You get the point. So I didn't take this trade today, even though it was on my watch list, because we weren't getting the volume that you would like to see. And this pullback, just like a lot of the stocks I had like 15 stocks on my watch list that were really good constructive setups that all broke to the downside. So as that's happening, I am less excited about putting money in the market. This is something that I'm still watching for. You got the 8-day exponential moving average kind of holding support there, but what you need is a break and kind of hold over these previous highs. So I'll probably give this a day. If we could close over 630 area, especially with some volume, that would be nice. Maybe this starts an uptrend again. But on the downside, you got some previous lows and the break of under the 8-day to get stopped out for, if this is a bear flag. But we'll see. Still looks relatively constructive. If you bought at the base here, this was a beautiful base that I just missed, but you're still profitable. Probably locked in some profit through here because you always want to do that, but looking like a good setup. So let's see what else we got in here. I'll get back to the PENN setup at the end of the video. PBI. I just did that chart. Wait, no. Yeah. Yep. Good question, Mike. So what percent away from the 8-day exponential moving average do I consider overextended? It's not always from the 8-day, but kind of the ideal breakout point. So as this kind of coiled up, we'll just use PBI as an example here. This coiled up, pulled back down, and then broke above that. So at this point, that's our ideal breakout point of 625 or so. So once you get over like 6%, definitely not over 10%. Once it's 10% over, I'm watching for a small volume pullback where I can get in once it starts showing strength. But if it's 10% over that breakout point, I'm definitely not taking the trade. 5%, and I'll probably put much smaller size on it. This I didn't get a full position on because I got it at 650. This breakout point 625. So don't want to take too much risk on that trade. But good question. Sometimes using the 8-day, but that ideal breakout point is usually more of what I'm looking at. All right. Another one I wanted to watch, BBIO. Come on. strong breakout through here, 44% in a couple weeks. Then you get your pullback of 14%. Gap down, but just ran all the way up, and big volume as this ran up, showing good strength. Then just kind of sideways movement. I was not aware of the stock until we got this green candle here, and then red candle pullback. So sucks for anyone that was in it already, but now for me or for people watching, good setup. You got the 8-day, the 20-day simple moving average right there. Volume getting a little bit lighter. So I'll be using the high of today at 39.73 to start some of my position, and then the rest at 40.23, the high of Tuesday, to get the rest on. And then this is another one with so close to that 20-day, so many of those previous lows are right there. So I'm not putting my stop right on that level. I'm putting it a little bit lower, but a trade that is going to tell you, Nick, you're wrong right away if it starts working against you, and that's exactly what I'm looking for. So this is BBIO. I see in the comments net, and that's one I wanted to talk about today. Strong move through here and then just broke out with tons of volume. So let's measure it from kind of like this breakout point. Ran up 40%, has now pulled back. It was looking kind of good today. I think it opened relatively high. And I said, oh, I'm looking at this. If this holds up, maybe I get in here. Did not hold up today. So I always give, I shouldn't say always, I should always give the market the first 30 to 60 minutes before putting on a trade. That's a tough lesson that I've learned multiple times in the past, and I've heard about it on the comments, so thanks for keeping me to my rules. And thankfully, did not take this trade today. Still has some room to move, so closed right at those previous lows. Let's see, the low today was 54.64. 54.85 is the low, 54.82. So now has undercut some of these lows, which for someone not in the trade, you like when a stock undercuts those lows because it gets some of those stop losses out before the next move higher. But I'm not just blindly buying into a downtrend. I want this to start to show some strength by moving up, breaking over some previous highs. So just adjusting that now. Let's see what tomorrow would be. Break over this downtrend would be around 57.40. Needs to do so later on in the day, and ideally with an uptick in volume, because as heavy as this buying volume was, we do have a good chunk of selling volume in here. So it's not the cleanest trade to take, but still has room to move up if we get more buyers coming in. But like I said, wait for the strength to show itself. Don't just blindly buy in, because a lot of these growth stocks we're seeing pullbacks to relative bases, and that would be a 15% pullback. You don't want to be a part of that. So that's NET. Another one I want to talk about was CELH, CELH. This is one that I talked about, I think, on Friday, where I bought during the first 30 minutes and got stopped out later on for a loss. But just because I took a loss on this, I don't want to have any bias or anything. This is still set up really well for a breakout. Zooming out here, you can see this has moved up, let's see, to the high for 400%. Pulled back from high to low, 35%. High to low, 22%. High to low, 19%. We're getting tighter. High to low, 13%. And then the last 3 days have been inside day, inside day, inside day. So what do I mean by inside day? Where the highs of the current day are lower than the highs of the previous day, and the lows of the current day are higher than the lows of the previous day. So you're getting this super tight price action here. And you have the 8-day exponential moving average, the 20-day simple moving average, the 50-day simple moving average, all right at that price. So it'll be a quick one to tell you if you're wrong. But again, you're not just buying because it's set up nice. You want to buy when it starts showing some strength. So this will be on my watch list. I wouldn't consider this revenge trading. That's something you want to avoid. But this is set up for a possible breakout. I don't want to have a bias on the trade just because I've lost money. But I'm not angry at the stock. I'm not saying, hey, give me back my money. These 4 letters that make up the stock ticker have no idea who I am, no idea what my entry was, what my money is. I'm not trading with emotion. I don't care about this stock at all. It doesn't care about me. I'm just trying to make money off a constructive setup. So the less emotion you can have on your trades, the easier it is going to be to admit when you're wrong and get out, keep those losses small, so you can have more loss. So you can be profitable while still having more losses than your wins. Like my trading currently have a 40-ish% win rate, but because my winning dollars to losing dollars is more than 2 to 1, I stay profitable. But that's CELH, CELH, really, really tight price pattern right now. Volume's very light, should get a strong move in one direction or the other. If it's going how the rest of the week's going, maybe this breaks to the downside, so that's why I'm waiting for it to show some strength to get back in. And last one I had before I get to the rest in the comment section is RVLV. Took this trade, let's see here, just a little bit at 1869 as it held up over that 8-day, closed near the high of the day. And we see all this buying volume come in. I checked FinViz, and this had like a 48%, correct me if I'm wrong, 48% short float on that, meaning a lot of people are shorting the stock. So if it does start breaking out, we're going to get that short squeeze and rapid price elevation. We've already seen good uptrend. Now it's pulled back. Pretty strong pullback, though. Actually, only 33%. Nothing crazy. And yesterday, we finally cleared over that 50-day simple moving average, closed above it, got that uptick in volume, so I added more to my position there. Today, we got another move, higher highs, higher lows, close above that upper Bollinger Band. Volume's still steady. Low of the day, hovered near, but never went under that 50-day simple moving average. Now that resistance becomes support. And there's a tiny little gap here that could actually, no, maybe we filled that already. 1997 was the high of the day today. 1999. So we filled that gap. Now we're coming up to a round number, $20. We move over that with some volume. You get those shorts covering. And this could, a move up to previous highs would be a 23% move. So what are you looking for? A move over 20. And where's your stop at? Depends on your entry. Depends if you've taken some profit, giving you more flexibility. But having some under this 50-day simple moving average. And then at this point, let's see. A couple under the previous lows would be 8%. So you could use those bracket stop losses of just splitting your position in half, doing 2 different stops. That'll keep you in the trade if it pulls back down and then kind of does a check mark and breaks back up. But also gets you out of the trade early on, so keeps your losses small. So that's RVLV, good short float, coming up to a round number, the volume pattern that I like to see on breakouts. So do you have a position on that already? All right. I did have one other one. Talked about this already. Did take some position off today, just as I'm trying to get my portfolio lighter overall because the market's not really acting well. This is SGMS. Had a strong breakout, 90%. Good volume pattern. Moving sideways, getting super, super light volume. But we did break under and close at the low under some previous lows. So got some out at 34 today. Still overall constructive. So that's what I'm watching for right there, is those higher lows to provide support. If we break under that, I'll probably scratch the trade for now, but keep it on my watch list, because we could just as easily see a breakout over those highs. Volume's been so light here. The only reason I would be selling is to get, if I'm already overextended, trying to get the whole portfolio a little bit lighter, and if this is hitting your stop losses for your P&L safety. This could break below this, and then it's got room to move on the downside, but vice versa, has room to move on the upside. Volume super light. This is going to move rapidly in one direction or the other. So keep your stops set, but I'm looking to add more position size back on if it does show some strength. This is GSMS. All right, so let's go to Beyond, BYND, another one that I had on my watch list. I actually had it on my buy list, but never worked out. I bought here, sold some into strength, and then it pulled back down. Was hoping for just a pullback to that 8-day, but you see the candle yesterday pulled back to that 20-day. Today, that held as support, but we closed right at that. We got earnings coming up, so 10/28, 7 days from now. What is that? Maybe 4 or 5 trading days. So not a trade that I'm going to take anymore going into earnings, but if we can kind of break over this diagonal, that's good. We got some support with previous highs through here. If we do break under that 20-day simple moving average, so that's going to be around 172. But either way, not a trade that I'm going to be adding to or taking going into earnings. Not likely I'll get the profit I would need to hold through. So that's BYND, EVRI. I read that right. EVRI, yeah. Yeah, not a, I guess it's over the 200-day, but what I really like to see for a stock that I'm trading is you see the 200-day simple moving average in an uptrend. So you know it's already been a market leader, but this hasn't been, kind of pulled back drastically. Is in a relatively strong uptrend now, but so many other stocks to take a look at. If you're already in the stock, you have clear uptrend. If that breaks underneath that resistance, so just draw it with the lows of some of these going up. Currently, let's see, tomorrow that would be at like 890. Break under that, close under that. Got that 20-day simple moving average. That would get dangerous as well. So that diagonal resistance and the 20-day, under that, you got the 50-day and the 200-day. But like I said, not a swing trade that I would be looking for. But, I mean, obviously a way you could make money on it. Many ways to make money in the market, just not what I would do. Let's see. MMEDF. Yeah. So cheaper stock, around $1. I won't be trading this until it starts getting in that into that $3 to $5 range. But look at this; it's running right at that 8-day exponential moving average. So breaks out, pulls back, breaks out, pulls back. Add the 8-day exponential moving average to your chart, and if you're in this already, just watch that, break under that, and it starts getting dicey. But even on this day, I wonder if this was just a flash crash, and then, because it pulled up, I wonder where the volume is on this day. But pulling back here, lighter volume. So you have the right volume pattern here. You have the right uptrend, just a little bit cheaper, so probably could be manipulated a little bit easier. But those are the areas you're watching for this. This is MMEDF. Upwork. So yeah, this was another one. Really nice VCP pattern through here with the undercut of the lows and then breakout of 32%. Looked like that 8-day was going to hold for support. Today, we just got that sell-off, close at the low of the day. Little uptick in volume, but still nothing crazy. But it's right at the high of this day here. So below that, you got the 20-day and kind of the highs over here as support, but probably took some profit today as it broke under all of these lows and the 8-day, because at a 30% profit, you want to book some of that at least. So those are the two areas I'm watching. So you got the 20-day at 1887 and the low of today and the high of this green candle on 10/7 of, what is that, 1964. So this is Upwork. Crowd. We'll end it with Crowd. This is a trade that I took on the breakout, sold some into strength, sold a little bit more into strength, and then got stopped out of the rest here. When it showed strength here, but then like moved down, so I was already thin on the position and then just ended up cutting it. Today, or I guess yesterday, you were watching, oh, this has held the 20-day simple moving average really well through this move higher, even on this pullback. So that's when a stock consistently finds support at a certain moving average, that's the one that you want to keep your eye on. And that's where it closed yesterday, right on that. So maybe we get a bounce and move higher. We did not. Quickly moved under that. So should have been stopped out as it undercut that, or at least the low on 10/15. Just dumped the rest of the day. Kind of moved up towards the end of the day, but this is not a chart pattern that you're buying into. It's not tightly wound up, not the volume that you want to see. So just cut it and move on. That was my plan. That's what I did. So let me just rapid fire through a couple of the stocks that were on my watch list that broke to the wrong side. And this is what's showing me, guys, the growth stocks that we like to trade, they're all breaking to the wrong side. So this is not a time to put a lot of money into the market, not a lot of time to put pressure on, swinging for a home run. So yeah, Plug. Oh yeah, we covered this one. Wedge broke to the wrong side. PLUG. Etsy. ETSY. Looked like it was just pulling back to the 8-day exponential moving average. Nice little wedge there, or not wedge. Flag, bull flag, broke down on heavy volume, clean cut under the 20-day. Had been a winner, broke out 35%. Breaking the wrong side, not good. NVTA has broken out 68% since this low in September. Pulled back, found some support at the 20-day, dumped clean right through the 20-day, right back to that breakout point. So this was one that I was watching to break over some previous highs to get going. Broke to the wrong side. Datadog, DDOG, same thing. Undercut the 8-day, recaptured it, looking good. Low volume pullback right to that. Then just clean cut under the 8-day exponential moving average, under the 20-day. Heavy volume on the selling, not good. Square. Strong move to newer highs, even when a lot of the tech weren't making new highs. Just kind of pulled back, then clean cut through here. So I was using previous highs to buy, but lower highs, lower lows. Found some support at that 20-day, but high selling volume. Let's see if that 20-day holds as any support. Let's see. Marvel, MRVL. Same story. Strong breakout, pulls back, finds a little support, small bounce at the 8-day. Does not hold, runs to the 20-day, closes right a little bit above, finding support there, and then today just cuts right through that. So these are all stocks that were on my watch list to buy, that Apps, same thing. Pulls down to the 20-day. Looks like it's making a new high, probably early on in the day. Just undercuts all that. Now right at some of these previous highs. Maybe there's support there, but you're not just buying randomly into a downtrend. So all these good growth stocks that have been in uptrends, that every time they pulled back to the 8-day or the 20-day, they've found support and pushed higher. They're all breaking through that support. So I'm not trying to play hero ball right now. I'm trying to have as little money in the market as possible, use a hedge to stay in positions with strong relative strength, maybe trade some not as popular names. So that's why I've been trading PEIX, AMTX, PBI, smaller names that don't have the same market correlation as some of these bigger names that have been doing well already. I'm not trying to hit home runs. I'm just trying to make a little bit of profit, kind of test the market. I'm not even really trying to make profit this week by any means. I'm trying to just get some feelers out into the market. And right now, all my feelers are saying the growth stocks that you like to trade are not working out. So not putting too much pressure on making money, just trying to see what we can do. So with that said, if you enjoyed the stream, please like and subscribe to Stock Tricks with Nick. We do this Wednesdays nights and Friday nights. And good luck trading for the rest of the week. Take care, guys.